morning, everyone, and welcome to the PivotBoss pre-market video for Friday, October 17th, 2025. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the ES in the daily time frame here. A big, sharp turnaround from the lows of the day. These lows were pretty much overnight lows right around the London Open. We saw price drop, and then we've seen the reversal ever since, and that reversal is a pretty good high range reversal. We're already at 104% of average range for the day as we head into the RTH Open, so already a drop and a big recovery. A recovery of the previous session's low in the bottom of the trading range, and this would suggest a continuation that could play out into the range above. Remember, this is Friday's range from last week. Super high range sell-off last week. Look at the range here, and ever since we've stayed mostly in the middle portion of that range. We still haven't hit the extremes, and we could continue to see that type of volatility chop back within the range. Overall, still a bullish bias. This price action here, this price action here, following these pullbacks, that price action here, all of that looks very similar to what we're seeing here, and the net result was usually new highs until proven otherwise. But we are sitting on significant support. We are sitting on major key levels from the previous month and quarter, and if we fail at those levels, that's where a big time continuation to the downside could occur back toward 6,200 to 6,300, right in this pocket right here. There's a ton of a confluence of key levels here that could be a magnet for price, but as of right now, everything's still flowing to the upside. Today, still flowing to the upside. We could even see a pullback here that leads to a continuation back up as this market recovering from the lows back up within the range that's developed throughout the week. All right, looking at the NQ. Here's the NQ, very similar price action. Look, that's Friday's range from last week. This has been the range this week. We noted to begin the week. Now that we have a new key range, this was the pre-market video just Monday. Now that we have that key range here, we have some back and forth that could play out within the boundaries of that range. And that could lead to more weakness depending on how headlines shake out, or it can lead to strength here. The net result recently has been strength, but we're in a different tariff-driven headline risk market at the moment, and that could go either way at times, at least in the near term. But any failure here could be significant. We could be dropping back toward that 23K zone, or perhaps even lower if a failure occurs. But right now, everything's still pointing up. Right now, short term today, pointing up with a shot to continue to rally back toward 25K even, and maybe even a little bit more. So I mean, this thing is still working its way back and forth. Any pullback could still be bullish for today until proven otherwise. Looking at crude oil, this one has kind of wiped out into the 56s. A little bit of a turnaround here off the lows over the last couple of hours, but really, again, as we've mentioned before, we've hit a bearish seasonal window here. The window opens right there, and it goes into about the first or second week of December. And we had 3 days up after that window opened, and now inverted down. If we get another bounce, it could be another opportunity down until proven otherwise. So this market heavily dominated right now to the downside, and we have a little bit more to go get those 54 lows. 54 is the next market structure level. See the CLVN there. If we get into 54s, that could provide a decent bounce, maybe a 5 to 6 point bounce. But again, back to 54 as we go until we finish that window. So again, keeping an eye on crude oil as a bearish trend that continues to play out. Any bounce could be sold until proven otherwise. Looking at gold. Gold, man, this one through the roof again. Trading 4,300, hit 4,392 on the high, but has now had a double top reversal in the lower time frame here, 60-minute chart. If you drill down into maybe a 5-minute chart, it looks like a quadruple top up there. and then it turns back down. If this thing starts to break back below 42.90 or the previous session's midpoint of 42.80 here, you could start to see a pretty aggressive day develop to the downside despite the strength we've seen, because the previous session was such a high range day. It was one of the higher range days we've seen. Actually, it was the highest day range we've seen. This is today. And to have that day develop at the extreme of a very, very mature, intense markup phase would suggest that the next day could open the door to a blow off top. We mentioned this in our trading room yesterday afternoon. You're seeing some of that right now, but if you fail through 80, it really opens up the potential of a higher range drop. Now, as of right now, we haven't seen that type of price action. You know, we've seen one big heavy pullback day here, and it was followed by strength. So again, this is not a trend to try to jump in front of to short. It continues to be highly bullish, but if it does give us a blow off top, it could be an impulse high, or the strong top before an impulse sell off may occur that gives us a new key range or some new market structure to work with. So keeping an eye on 42.80 today. Big time reaction at those highs. All right, looking at the YM. YM right now up at the moment after a strong drop. This was a stop run day down into support. Look at that support right there. That was great. That was earlier in the week. Big time turnaround, extreme reversal here in the 60-minute time frame. A big time reversal back up. And again, high range day of 98%. To have a big 100% of ADR day down and then recover, you're basically doing average range twice in one day. So that's big. And the RTH Open hasn't even opened yet. So that's pretty significant right there. Now, we could drop as deep as the previous session's low or the current day's midpoint after the RTH Open. Same thing across the board for the ES and the NQ. And if we can find early higher lows there, again, we can extend these gains into the trading range that is already developed throughout the week. So again, could finish quite bullish here today, but still within range. The overall trend is this way. This price action following the recent sell-off looks very similar to the price action we've seen over here. And after yesterday, we mentioned yesterday's day could be like this, and is the next day like that? So we asked the question in our trading room today, already showing signs of a great reversal. We've got to see how it finishes. All right, let's take a look now at Bitcoin. This one down over 2%. Now, this one's the one that is in the danger zone, but it's also in a very, very good zone for bulls. If you're looking at a short-term potential opportunity to the upside, this could be the zone right here. Your previous quarter's low is that low right there. We just took it out here a couple of hours ago. This is your rising 200-day moving average, and this is your rising year-to-date VWAP. That's a very powerful zone right there for participation, especially on new lows, fresh new lows, especially after the outside quarter down. This thing drove up first. We called rejection here on day 2. We saw the retest on days 3, and then you see the continuations 4, 5 here all the way down. That became an outside quarter here as of last hour. So now, do we get the opposite move? Expanding range here. Do we get the bounce back to the top of the range, back to the middle and the top? This could be a zone where that occurs. It depends on how today finishes. Maybe today's the first day probing, and then we got to finish a little stronger here with the rejection. But we got to find a bookend reaction here to see, can we bounce? But this is a big time zone right here. Anytime you're testing the 200-day in a rising market here, it can be an opportunity for bulls to defend and take this thing higher. But if you start to take that out, things get very, very bearish. So that's why I said this is a very important zone for this market. 100K is the market structure level. Remember, it's every 25,000 for this market. So ultimately, you need to break through 100K to open up 90 and below into 75. we could still drop into 100 and bounce. So again, trying to find the edge, but letting it do its thing right now as it probes support. Looking at ETH, this one's also down 2+% right now, and has also tested support and is in new low territory here for the last couple of months. That right there, 36.85, is the freshest low here that we've seen since it broke through that level into the 4,800 level in early mid-August. So that's a key range low. There's two key range lows, is that low and that low. That's last Friday, that's last month. Big time levels right there. We're in the green zone here for a potential pop. Again, expanding range. The top end is more flat. Do we get a bounce back across the range? This is the spot where we could see a decent short-term bounce. But man, if this bounce fails, or if this edge fails, that's going to be a market structure breakdown after a mature markup move following a very wide range for distribution. That could lead to quite the markdown if this area fails. So letting it probe the zone to see how it continues to play out. All right, that is it for now. We'll see how this plays out here heading into our Friday session. Please give me a big thumbs up on the video. Please give me a like and a share. Also, today is the last day of PivotBoss Masters live sessions. The sessions have gone so well here. We're going to be opening up another round here very shortly with our pro indicators as well. And we're also going to be releasing the rest of our pro series of signals for the rest of our signals as well to our members. So again, still time to join. Click the link here at pivotbossmasters.com/profits to join. All right, that's it for now. We'll see you in the trading room. Take care.